Inflation pressures remain elevated, with food prices continuing to increase. The highest rate of increases in the food category was recorded in the oil and fats, as well as bread and cereals products. Transport remains a large contributor despite the decrease in the price of fuel in September after months of steep increases. A litre of petrol decreased by 2.04 cents, while the price of diesel dropped by 56 cents per litre. It's expected that inflation will continue slowing on the back of the easing global economic performance.
We believe that inflation, will continue to ease further, given that inflation is actually constructed in two elements: 70% global supply, constraints that we've actually seen, globally, and 30% is actually demand. And if you look at those, global supply, indices, they've actually come down significantly, recently. And despite the move by, OPEC to cut, oil production by 2 million barrels per day. We also saw the U.S., highlighting that they will release some of the reserves, releasing around 10 million barrels, per day. And the other element to this is that the global economy, it's actually on a slowdown, we are seeing a low, global demand when you look at, the oil.
Analysts say the high inflation rate will likely lead to the Reserve Bank continuing to hike interest rates in a bid to bring it under control.
By the Reserve Bank's own forecast, we expect CPI inflation to be below the 6% mark around middle of next year, of 2023, and to close off the year of 2023 around 5.3%. So it's going to take a bit of time, but it will begin to show that improvement. And the other impact is around whether we will see further interest rate increases. And that does depend on what we're seeing now. So we're still above the inflation target, which does leave some room for further increases. We also are monitoring what happens in the USA and what the Fed does. So if there's further increases in the USA, it does put more pressure on our own Reserve Bank to do the same.
Consumer inflation has been above the Reserve Bank's target bracket of 3 to 6% for a fifth consecutive month. The central bank expects inflation to average 6.5% this year. Gloria Sefako Mosi, SABC News, Johannesburg.